Hello, welcome back to part 2 of my 5 stocks to buy right now. There's an EV sector crash that is potentially still not bottomed out and has not fully reversed, but guess what? NIO ain't crashing for much longer because they released in January their first autonomous driving model, the ET7, and the countdown to deliveries is less than 10 months away. Today, we're going to take a quick drill into and look ahead on the coming future potential for one of the backbone stocks in my Freedom portfolio, and the stock which started my whole journey here on YouTube. Yes, it's been an update long overdue. Stay tuned. Keep it simple. For those of you new to the channel, I am the Simple Trader and I bring to you EPG stocks. Yes, explosive exponential potential growth stocks that I'm looking to buy or already have sitting in my Freedom portfolio. I am not a financial advisor, so please understand this is all for entertainment only. Full disclosure, I started a position in NIO all the way back in late August 2020. My first position was around the $12 range. I continued buying all the way up to $19 and have an average cost of around $15. I rode the stock all the way to its 60 plus levels.
The electric vehicle sector is one of the hottest parts of this market, and it's not just Tesla. Take a look at some of these stock moves. Chinese automakers Li Auto and Xpeng have doubled since their IPOs, while battery maker QuantumScape is up about 440%. But those stocks have nothing on NIO. That stock is up more than 1,600% just in the last year. That makes NIO worth nearly as much as Ford and General Motors combined.
When the stock pulled back, I sold shares to cover my original investment at $52. Is it now time to load up the boat again? Well, no more plugging, let's start drilling. In my last video released on January the 1st, yes, New Year's Day, I predicted NIO would explode due to quite a few catalysts, and I predicted that NIO could hit $60 within January. It actually went as high as $66.99 intraday on the 11th of January. Since then though, NIO stock has seen a significant sell-off, and it follows the overall downtrend of the tech and in particular the EV stock market decline. The price action has bounced 3 times since around the $34 to $33 mark, which is acting as some serious support. We are at this level again, and if it trends back up and breaks the resistance level of around $45, then I think we could see a nice run up to end the year, and I mean nice.
Jesus Christ, great.
I personally believe the market correction will reverse in the coming 2 months, and we could see NIO reach all-time high levels before the end of this year. The Q1 2020 earnings release was on the 29th of April. The key takeaways for me include NIO continued to break records, and in Q1 they surpassed the 100,000 vehicles and delivered 20,060 vehicles, which is an explosive 422.7% increase year over year. What's more impressive is the continued growth even from the fourth quarter of 2020, where we truly saw NIO becoming an EV giant, and they even beat Q4 deliveries by a staggering 15.6%. Vehicle margins improved somehow to 21.2% in Q1, up from 17.2% in Q4 2020. And bear in mind this, that 1 year ago in Q1 2020, the margin was a negative 7.4%. This goes to show that NIO are one step closer to profitability and are clearly heading in the right direction as a business. Remember, it took Tesla over 10 years to reach a profitability milestone. Loss from operations decreased a whopping 81.2% year over year and 68.2% from Q4 2020, and that is with share-based compensation factored in. Also, cash is king, as we all know, and cash they have in the colossal sum of $7.3 billion US. That's $7.3 billion US. Ridiculous ridiculous. Of course, here is where the bears will look to downplay NIO. That is, they are still reporting an adjusted loss per share of 23 cents, which is below some expectations and forecasts. But put into perspective, this is still a huge positive move from the 93 cents loss in Q4 2020. And also, just bear in mind this, that the basic, adjusted and diluted net loss per share was only 4 cents. So, the next earnings will and could be moonbound for the stock. What sets NIO apart from all the other EV car manufacturers is the premium quality that the brand is now clearly synonymous with. These are not standard vehicles. These are really luxurious cars that are packed with AI, autonomous features, and state-of-the-art experiences and interior design. NIO is a long-term investment for me that is akin to Tesla 2 years ago. The trajectory, I believe, could be as explosive, if not more, due to the China market conditions, where it looks like Tesla are now facing issues, whether it's bad or targeted PR, or simply nationalism and tactics to try to push the Chinese agenda. Who knows? What I do know is that in April, NIO appeared to overtake Tesla.
Sales of Tesla vehicles made in China down 27% in April from the prior month. That's according to the China Passenger Car Association. The group cites a 12% decline in sales for new energy passenger cars.
And according to one source, NIO took 23% of the EV SUV market, ahead of Tesla's 17%. The changing landscape is clear in China. What about the rest of the world? Well, NIO officially launched in Norway, and this is huge. Why? Because according to Statista, in 2020, actually, since about 2015, we see the largest EV countries in the world being China, followed by Europe, and then the US. So, for NIO, who are already in the China market, makes absolute sense to expand first into Europe, where it is the second largest EV economy, and you'd be surprised, their main competitor in Europe since April this year is not Tesla. It's Volkswagen. Although for the first 4 months of 2021, the Tesla Model 3 is still the leading EV car in terms of sales. What I've always said in my previous bull case thesis is that I believe NIO are not just an EV car maker, and this is really becoming more and more evident in the way they present their company. Just take their patented battery swap technology. This is being rolled out nationwide in China with more and more battery swap stations. For me, this makes so much sense for car owners, as they will consistently get the best battery technology, and the depreciation associated with the battery like you would get in a Tesla does not really come into play. And this is even without mentioning the huge discounts you get when you select battery as a service when you first buy the car day one. NIO House sets a standard in terms of customer service. Their breakdown battery recharging service is next level. And also, do we need to mention the AI assistant Nomi?
我们来张合影吧。
好的，准备好了吗？3、2、1 ，Mommy。
But let's bring it right back down to technology. NIO Autopilot is going to set the standard, I believe.
And so when I put this together and think about EV and autonomy, this is a massive market. It's the transportation market, car market's $2 trillion, the broader transportation is an additional $2 trillion. We're talking $4 trillion. That compares to the smartphone market at $500 billion. So it's understandable, the enthusiasm around these stocks. I just caution that this will take longer than people think. And I would put it all together, Becky, and say this. If you're trading these stocks for a 1-year time horizon, that is a dangerous endeavor. Ultimately, if you're investing in these companies for 3+ years, that's wise.
With their autonomous driving technology, they will be the first to market with robo-taxis in China, which will be the biggest game changer in the coming 5 years. This could and will put NIO on another level. Some might argue Tesla are ahead in technology, but let's not forget We are talking about the Chinese EV market predominantly for NIO at the moment, and we also know NIO have the backing of the Chinese government. As with any tech investment, we have to be careful and weigh up the risks versus the rewards. At sub $35, NIO represents a minimal risk investment choice, but provides that potential for a huge upside in the coming 3 to 5 years, and I still stand by my previous price target of $500 when I first did my deep drill into NIO. To summarize, NIO is my number 2 conviction stock right now based on all the fundamentals, the discounted stock price, the future potentials, the autonomous driving technology, battery as a service, the latest earnings, and the huge understated expansion into the European market. I see NIO reaching and surpassing all-time highs before the end of this year based on a potential catalyst of a positive earnings per share in either the second or third quarter earnings call. Thank you for watching, and remember, I am extremely bullish on NIO stock moving forwards, so please do take this video with a pinch of salt. If you are interested in WPG stocks that I have in my Freedom portfolio, please check out my other videos. If you enjoyed part 1 and 2, then please stay tuned for part 3, where I will share with you my third highest conviction stock right now. So please consider, just consider subscribing to my channel so you get the information first. I am the Simple Trader, and I try to keep this simple, and will simply see you next time.